Hey everybody, this is John and welcome to the free video. So, what is going on? Well, a couple things here. Obviously, we've got a little bit of a down move happening here, and the question is how long can this last for? Keep in mind, this has actually been a pretty clean channel to the downside. The squeeze has fired short, and the question at this point is, of course, what happens from here? What I'm looking for typically when you get a break like this is that you get kind of a snapback to the falling 8 EMA, which is lining up right here. So in that case, that would take us to about 2890, which is another 50 S&P points from where we are right now. It actually would make sense, of course, pending any crazy overnight tweets, that we could work our way up there and with some short covering into this monthly expiration, and then from there potentially roll back over and die. So a couple things to keep in mind here. In terms of the indexes, we do have this big open gap as well from that Sunday night last week gap down, or for Monday's gap down. So that's at 2890. That also lines up with the 21 EMA. Okay, so it would make sense. We can kind of come and clean up that gap. So I like the long side here for kind of a, for lack of a better term, kind of a dead cat bounce. But I also think about 2890 is the most we're going to get, and I would be flipping out longs and turning around and shorting. And then keep in mind that there are stocks out there that don't really care what's going on, and if you want to sleep at night, great, focus on those. They're not really caring if the market is going down or not. One of the most important things to keep an eye on in this market is the yen. The ETF for the yen is here. And basically how this works is that if this is going higher, it's telling you, screaming at you, as a matter of fact, that money is coming out of stocks. Okay, and if it's going down, it's reversal. So a lot of times people don't, understand that. It's like, well, it doesn't make sense, and what does it mean? And you don't actually, it's kind of like when I plug something into the wall. I know, if I plug my iPhone in the wall, I know it charges. I don't exactly understand every single piece of mechanic of why it works that way. But just know that if the yen is going higher, basically from the moment it breaks out, it's going to be stocks are under pressure. The currency market is way, way, way bigger than the stock market, okay? So as we're watching this, keep in mind that it would make sense that the yen could at least pull back to the 8 EMA, possibly to the 21, and that would also bode well for stocks, all right? That's what we have for the short term. Now, if you're interested in some kind of longer term stuff, for example, one of my favorite long-term trades right now has to do with the bond market. Okay, favorite long trade there. But you might be interested in longer trades on stocks. Now, as a reminder, Jack and Allison will be hosting their encore free webinar on their longer term option strategies. If you go to simplertrading.com/bigger, you'll be able to sign up for this free webinar they're having Wednesday, May 15th at 7 o'clock Central. They're going to get into a little bit more specifics in this one. There's going to be a case study where Allison is going to talk about her $720 per contract AVGO trade, how to block out the noise and focus on the company reports that matter. If you've ever seen data that comes out of an earnings report and thought like, well, it sounds like it's really good, but the company is not responding, this is where you learn to focus on the stuff that matters. Timing, high confidence options trades, the kind of a checklist, 5 steps to consider a trade, and then how Allison repeatedly identifies major buying opportunities during market sell-offs. So they've got a very good mix of combined experience here, and they're going to be diving in and talking about all this kind of stuff on Wednesday. All right, you guys have a fantastic evening, and we'll see you at the next update.